Hello friends, today's topic is money, property, which is movable property or immovable property, which are received without consideration or for inadequate consideration, where the benefit is exceeding more than 50,000 rupees. In such a scenario, money and both the properties will be taxable in the hands of the recipient under section 56 to 10. Barring few exceptions, the recipient is bound to be taxable on the property money which are received without consideration or for inadequate consideration, where the total benefit is exceeding 50,000. So friends, the next clause is 56 to 10, clause 10 of subsection 2 of section 56, which deals with money received without consideration or inadequate consideration, immovable property received without consideration or inadequate consideration, and the third category is movable property received without consideration or inadequate consideration. Without consideration means that without giving anything in return, you are receiving cash, you are receiving benefit. So person A, person B, A is giving cash to Mr. B and B is not required to give anything in return. So here a benefit is arising to Mr. B where he is receiving cash without consideration, and if the amount is exceeding 50,000, then the entire benefit, then whole of the amount will be taxable in the hands of the recipient. In our example, it will be taxable in the hands of Mr. B. Similarly, immovable property, if transferred, so before moving on to immovable property, so that was without consideration. Let's say, so friends, this was for money. Money, there will be without consideration. Inadequate consideration, you can say, if the benefit is less than 50,000, then nothing will be taxable. Correct? In case of money, there is only one category which is without consideration. In case of immovable property, two categories without consideration and inadequate consideration. Again, example Mr. A, Mr. B. Mr. A is providing immovable property to the recipient, to Mr. B, without expecting anything, right? And Mr. B hasn't made any payment for the immovable property transferred by Mr. A to Mr. B. That will be without consideration. And if the stamp duty value of the property is exceeding 50,000, meaning the benefit is exceeding 50,000, then whole of the amount will be taxable in the hands of the recipient. Whole of the amount will be taxable in the hands of Mr. B in our example under section 56 to 10. Similarly, if there is inadequate consideration, let's say Mr. A has transferred the immovable property to Mr. B at 10 lakhs. The stamp duty value of the property is 10 lakhs, and out of 10 lakhs, Mr. B has paid 5 lakhs to Mr. A. So, this will be an example of inadequate consideration wherein certain amount has been paid by Mr. B. However, the benefit is still exceeding 50,000. In such a scenario, the amount which is the benefit to the assessee to the recipient will be taxable as income from other sources in the hands of the recipient. Similarly, for movable property, instead of stamp duty value, you have to consider fair market value of the property. And the bifurcation will be without consideration and inadequate consideration. And for immovable property, there is an additional category of, so friends, additional condition for immovable property is apart from 50,000 criteria, I mean the benefit should exceed 50,000. Also, the benefit should exceed 5% of the consideration. I mean there is a tolerance limit for immovable property wherein if the value of the property, stamp duty value of the property is less than 105% of the consideration, let's say consideration is 100 and stamp duty value is 103. So it is within 105% of the consideration. In such a scenario, the consideration would be accepted. Consideration amount which has been paid by the SSC will be allowed and nothing will be taxable in the hands of the recipient. So if the benefit is within 105% of the consideration, then nothing will be taxable in the hands of the recipient. We will be covering this in detail in subsequent slides. So friends, till now, three categories: money, immovable property, movable property. For money, without consideration, benefit exceeding 50,000, whole amount will be taxable. For immovable property and movable property, two categories: without consideration, inadequate consideration. In both the cases, if the benefit is exceeding 50,000, then the entire amount will be taxable in the hands of the recipient. Also, for immovable property, there is a tolerance limit of 5%. So, the category is 50,000 or 5% of the consideration, whichever is higher. If anything is higher than this, then the entire amount will be subject to tax in the hands of the recipient. Correct? So, friends, on your screen, money, property, which includes movable property and immovable property, which are received by the recipient without consideration or inadequate consideration. Section 56 to 10. Where any person receives in any previous year from any person or persons on or after first day of April 2017. So any person receiving in any previous year. Subclause A, any sum of money without consideration, the aggregate value of which exceeds 50,000 rupees, the whole of the aggregate value of such sum. So, money received without consideration, benefit is exceeding 50,000, whole of the value will be taxable as per subclause A of clause 10 of subsection 2 of section 56. Subclause B, any immovable property without consideration, stamp duty value of which exceeds 50,000, the stamp duty value of such property will be subject to tax in the hands of the recipient. The entire value of stamp duty will be subject to tax in the hands of the recipient. Correct? So here, stamp duty value of such property will be taxable in the hands of the recipient. Now, where there is a consideration, where out of 10 lakhs in our example, if 5 lakhs were paid by the recipient, in such a scenario, what you will have to do is, for a consideration, the property has been transferred for a consideration, the stamp duty value of such property exceeds such consideration. So in our example, stamp duty value was 10 lakhs and 5 lakh is the consideration, correct? If the amount of such excess is more than higher of the following amount, namely the amount of 50,000 rupees and amount equal to 5% of the consideration, correct? So 5% of 5 lakhs will be considered, or 50,000, whichever is higher will be the limit applicable. So for the three categories, money, immovable property and movable property, we have generally seen that anything in excess of 50,000, if yes, then entire amount is taxable, right? However, for immovable property, additional condition is apart from 50,000, you will have to consider 5% of the consideration that has been paid by the SSC, by the recipient. If anything has been paid, then consider 5% of it, 5% of the consideration paid, and 50,000 and 5% of the consideration, whichever is higher. If stamp duty is exceeding that amount, the excess amount is exceeding both the limits, then in such a case, the amount which is in excess will be subject to tax in the hands of the recipient. Friends, let's take an example to better understand this concept. On a screen, let's say stamp duty value of the property. Stamp duty value of the property is 10 lakhs. Consideration paid by the recipient is nothing but 6 lakhs. Then in such a scenario, anything excess, this excess amount, or you can say a benefit which is going to the SSC is nothing but 10 lakhs minus 6 lakhs, which is 4 lakhs, correct? This amount is supposed to be compared with limit of 50,000. It is to be compared with higher of following, which is 50,000 and 5% of the consideration. It is the tolerance limit, wherein if the excess, which is 4 lakhs, is not exceeding 105% of the consideration, then that amount will be accepted. In another words, 4 lakhs, the excess amount, let me complete this, 5% of the consideration is nothing but 5% of 6 lakhs, correct? Which will be 60,000, it will be 30,000, right? So higher amount is nothing but 50,000 in this case. So since the excess amount 4 lakhs is exceeding 50,000 amount, correct? So this excess amount, the benefit which has been received by the recipient of 4 lakhs will be taxable under section 56 to 10. So you will agree to my point that whatever is the benefit is taxable, right? So the benefit in the hands of the recipient is nothing but 10 lakhs, the stamp duty value of the property minus any consideration which has been paid by the SSC, by the recipient. In this example, 6 lakhs have been paid by the SSC. So 10 lakhs minus 6 lakhs, 4 lakh is the benefit, and this 4 lakh amount will be compared with 50,000 or 5% of 6 lakhs, whichever is higher between the two. Then in such a scenario, if the benefit amount, which is 4 lakhs, is exceeding this criteria, then entire benefit amount will be subject to tax in the hands of the recipient. This amount, let's say, would have been 5 lakhs, just an example. So you could have said that 4 lakh benefit is within the tolerance limit. Here the tolerance limit was 50,000 or 5% of the consideration. If the excess amount is within the accepted criteria as per the law, then nothing will be taxable in the hands of the recipient. However, in this case, if in our example, since the amount was 50,000, entire 4 lakh was taxable in the hands of the recipients. If it would have been 5 lakh, then this excess amount wouldn't have been taxable in the hands of the recipient, and nothing will be taxable under section 56 to 10. I hope, friends, this makes things more clearer for deriving the benefit value in the case of immovable property. Moving on further, now friends, this clauses proviso are nothing but first proviso says that wherein the date of agreement, where there is a difference between the date of agreement and the date of registration of the property, then stamp duty value on which date is supposed to be considered. So date of agreement, let's say, was on 31st of March 2020. However, registration, the formalities of registration were able to be completed only after 6 months, 30th September 2020. So there is difference between date of agreement and date of registration. In such a scenario, what the proviso says is you have to consider the date of agreement. The stamp duty value on the date of agreement have to be considered, wherein condition is certain amount has to be paid by the recipient in such a case. I mean, certain consideration amount has to be paid in the case of date of agreement, in the case where the stamp duty value is to be considered on the date of agreement. What will be the practical scenario will be, there might be difference of stamp duty value on the date of agreement and on the date of registration. In such a scenario, it has been provided by the law that stamp duty value on the date of payment is to be considered for the purpose of computing the benefit under section 56 to 10. And the payment of consideration, if any, the payment of consideration should be made through prescribed modes only, which is account pay check, account pay bank draft, ECS, or any other prescribed modes, which is other than cash, other than cross check. You should be making the consideration payment by way of prescribed modes only for availing the benefit of difference in stamp duty value, for availing the benefit of stamp duty value on the date of agreement. On your screen, provided that where the date of agreement fixing the amount of consideration for the transfer of immovable property and the date of registration are not the same, the date of agreement and the date of registration are not the same, the stamp duty value on the date of agreement may be taken for the purpose of this subclause, right? In such a case, stamp duty value on the date of agreement is to be considered, provided further that the provisions of first proviso, which says the difference between date of agreement and date of registration. So, provisions of first proviso shall apply only in a case where the amount of consideration has been paid by way of account pay check, account pay bank draft, ECS, through bank account, or such the electronic mode which has been prescribed on or before the date of agreement for transfer of such immovable property. So friends, if we read this cumulatively, if both the provisos are read in cumulatively, it says that the facts of the case are date of agreement. There is difference between the date of agreement and the date of registration, right? Now, stamp duty value on which date is supposed to be considered, on the date of agreement or on the date of registration of the property. The first proviso makes it clear that stamp duty value on the date of agreement is to be considered, correct? Now, second proviso lays down additional conditions, which are two conditions. First, the consideration which is paid by the recipient should be paid by the SSC by way of prescribed modes, correct? And secondly, the payment, it could be whole of the amount or part payment. The payment should be made by the recipient on or before the date of agreement, correct? Only if you will agree to me that this is applicable only when immovable property is transferred with inadequate consideration. And in case of date of agreement and date of registration, certain amount has been paid on or before the date of agreement and it has been paid by way of prescribed modes. Only if these conditions are satisfied, then stamp duty value on the date of agreement will be considered. There might be a scenario wherein stamp duty value on the date of agreement is 100. However, on the date of registration, the stamp duty value is 150. So you can expect that additional amount may be taxable in the hands of the recipient if we consider stamp duty value on the date of registration. That's why both these provisos clarifies that if certain conditions are satisfied, then stamp duty value on the date of agreement shall be considered for the purpose of computing the benefit under clause 10 of subsection 2 of section 56. Correct? Now friends, till now we have studied two categories: money without consideration and immovable property without consideration or inadequate consideration. Also further, wherein the stamp duty third proviso says wherein the stamp duty value is challenged by SSC. In such a case, wherein the stamp duty value assessed by the assessing officer is challenged by the SSC, the same stamp duty value will be referred to the valuation officer, wherein the value of the property will now be derived by the valuation officer. And if the valuation officer says that the stamp duty value is indeed correctly computed, then SSC will have to go ahead with it. Else, if the valuation officer says no, the stamp duty value was much higher, actual valuation is less than the stamp duty value, then the amount suggested by the value suggested by the valuation officer will be considered for the purpose of computing benefit under this clause. This is what the third proviso says, provided also that where the stamp duty value of immovable property is disputed by the SSC on grounds mentioned in subsection 2 of section 50C, there is nothing but the SSC is challenging the stamp duty value. The assessing officer may refer the valuation of such property to the valuation officer, and the provisions of section 50C and subsection 15 of section 155 shall, as far as may be, apply in relation to stamp duty value of such property for the purpose of this subclause as they apply for valuation of capital asset under these sections. For the time being, you can remember that if the stamp duty value derived by the assessing officer is more than the value derived by valuation officer, then value derived by valuation officer will be considered for this clause. However, if value derived by the valuation officer is exceeding the stamp duty value, then stamp duty value will continue to be applied. Stamp duty value will continue to be applied. So you can say there is a benefit to the SSC wherein the stamp duty value would be checked by the valuation officer. If it is higher value when compared to the valuation officer value, then benefit for the SSC will be such devalued rates, meaning the value derived by the valuation officer will be final. If valuation officer says no, the stamp duty value is at a lower side, then SSC has a benefit of continuing with the stamp duty value also. So here you can see with this proviso, the SSC, the recipient, is challenging the value, the stamp duty value derived by assessing officer, and if it is higher, then a suitable value derived by the valuation officer will be considered. and if it is lower, then stamp duty value will continue to be applied to the SSC for the purpose of computing the benefit. Correct? So friends, this concludes the immovable property part. Correct? Now moving on to the next part, which is any property other than immovable property, which you can say is movable property. And also friends, for the purpose of this clause 10, there is a definition provided for property wherein the assets mentioned under the definition of property only are to be considered for 56 to 10, and it includes majorly all the movable properties including shares and securities, and immovable property are also included any asset apart from the definition which are not included in the definition of property. To those assets 56 to 10 won't be applicable. And also, if such properties are used by the SSC for the purpose of business or profession, then the same cannot be brought to tax under income from other sources. Correct? So, friends, movable property, the heading says any property other than immovable property. Just to clarify, it includes shares and securities also if you are not dealer in shares. So that's why the word specifically, the heading specifically doesn't say that the category is movable property. For a simplicity purpose, you can always say that this is movable property. Correct? So without consideration, if you see, it is nothing but if the consideration is more than 50 lakhs, if the fair market value of the property is more than 50,000, then the entire amount is taxable in the hands of the recipient. In case of inadequate consideration, if the benefit is exceeding 50,000, then the entire benefit will be taxable in the hands of the recipient. So the concept remains the same as immovable property. The only difference is instead of stamp duty value, you have to say fair market value of the property. Correct? So friends, without consideration, the aggregate fair market value of the property exceeds 50,000 rupees. In such a scenario, the whole of the benefit is taxable in the hands of the recipient. In case of inadequate consideration, consideration which is less than the aggregate fair market value of the property, and the benefit is exceeding 50,000, right? The aggregate fair market value of such property as exceeds such consideration, which is nothing but the benefit 10 lakhs minus 5 lakhs, 5 lakh rupees, the benefit in the hands of the SSC will be subject to tax in the hands of the recipient. Here you would have observed that the 5% consideration is not applicable in the case of property other than immovable property, meaning this clause is not applicable in the case of property other than immovable property. So the 5% of the consideration clause is specific to immovable property only. For movable property, you can continue to apply 50,000 criteria, wherein if the benefit is more than 50,000, then the entire benefit amount will be taxable in the hands of the recipient. So friends, as you can see, another difference in movable property is also the provisos are not applicable, wherein the agreement value, registration value hasn't been mentioned for the immovable property. Correct? So these provisos that we are talking about, the date of agreement, date of registration, first proviso is not applicable. Second proviso is nothing but is an extension of first proviso. Accordingly, second proviso won't be applicable for movable property also. Also the third proviso, wherein the value is derived by the valuation officer, is also not applicable for movable property. Correct? So only similarity you can say between movable property and immovable property is the criteria of without consideration and with consideration, wherein if the benefit is exceeding 50,000, then the entire amount will be subject to tax in the hands of the recipient. The entire benefit amount will be taxable in the hands of the recipient. Now friends, moving on to the exception part, wherein if the recipient of the property of the cash are relative of the donor of the transferor, in such a case, nothing will be taxable in the hands of the recipient. Whether it exceeds 50,000 or not, nothing will be taxable in the hands of the recipient. The exception categories are: recipient is a relative of the transferor, recipient has received the property on the occasion of his marriage, his or her marriage, property has been received under a will, or property has been received by way of inheritance, and there are several other criteria wherein nothing will be subject to tax in the hands of the recipient. Let's go one by one. Provided that this clause shall not apply to any sum of money or property received, meaning 56 to 10 entirely won't be applicable. It includes money, immovable property as well as movable property, where the property has been received from any relative. Relative here includes brother, sister of the spouse are included in the terms in the definition of relative. Any linear ascendant or descendant of the individual, correct? So this will be the definition of relative, which if you want to go in broader terms is nothing but has been mentioned over here. In case of an individual, spouse of the individual, brother or sister of the individual, brother or sister of the spouse, brother or sister of either of the parents of the individual, any lineal ascendant or descendant of the individual, any lineal ascendant or descendant in the case of spouse of the individual, and spouse of any of the persons referred to the above. So quite a broader terms has been mentioned under the definition of relative, wherein spouse of the individual, brother or sister of the individual, brother or sister of the spouse of the individual, then brother or sister of the parents of either of the parents of the individual, any lineal ascendant or descendant of the individual, also of the spouse, lineal ascendant and descendant, and spouses of any of the person referred to above are also included in this category. So quite a broader definition for the term relative, wherein if the recipient has received from such a relative, then nothing will be taxable in the hands of the recipient, correct? And in the case of HUF, any member of the HUF providing the property providing cash will be not taxable in the hands of the recipient. So relative definition is related to an individual or an HUF. In the case of individual, you can see there are 7 clauses mentioned, and in the case of HUF, if any member of the HUF is providing anything to, you can say HUF, then nothing will be taxable in the hands of the recipient. Nothing will be taxable in the hands of the recipient HUF. Moving on to the definition part of the exceptional part. So exception 1 was relative. Second, on the occasion of the marriage of the individual. Third, amount or property received under a will or by way of inheritance. Then, in contemplation of death of the payer or donor, as the case may be. So, as per desire of the payer or donor on his or her death, any payment made to the recipient, nothing will be taxable. Any payment on the death of the payer or donor, the same won't be taxable in the hands of the recipient. Where money property has been received from any local authority as defined under section 10, clause 20 of section 10, where money property has been received from any fund or foundation or university or other education institution or hospital or other medical institution, then nothing will be taxable in the hands of the recipient. From any trust or institution registered under section 12, 12A, 12AA, where money or property is received by any fund or trust, right? So in clauses till now we were like it has been received from the donor, the payer is a local authority, the donor or payer is a fund or foundation or university or medical institution. So here the words from was mentioned, wherein it was signifying that it is a donor or a payer. However, in clause 8 you can see if the recipient is also a fund, trust, institution, then nothing will be taxable in the hands of the recipient. Correct? Then ninth clause, where the transaction is in the nature of, which has been mentioned under section 47 of capital gains, wherein it is not regarded as transfer between demerger companies, demerged company and resulting company, amalgamated company, transfer in the plan of succession of a proprietary concern to a firm, to a company, and conversion of firm to a company. So the conditions that we had studied at the time of studying the topic capital gains, wherein certain transaction won't be regarded as transfer, are also covered in the exceptions of section 56 to 10. So transactions not regarded as transfer, section 47 friends. There are clauses which has been mentioned over here, correct? Wherein next one is from an individual by a trust created or established solely for the benefit of the relative of the individual. Very important, practically also very important, wherein generally for the benefit of the beneficiary, you can say for your child, you are creating a trust wherein parents are investing an amount in a trust year on year, and ultimately after certain number of years the benefit will accrue to the beneficiary, to the child. In such a case, any such individual transferring to a trust solely for the benefit of relative of the individual, in such a case nothing will be taxable in the hands of the recipient. Correct? So an individual is transferring amount, money, property to a trust which is ultimately for the benefit of the relative of the individual. In such a case nothing will be taxable in the hands of the recipient. And the last category is from such class of persons and subject to such conditions as may be prescribed. So anything prescribed by the government, by the central government, will also be included under the exceptions clause. So friends, these were the exception to section 56 to 10, wherein we have discussed 11 clauses wherein the recipient falls. If the recipient falls in any of this category, then nothing will be taxable in his hands, and meaning the property, money, movable property as well as money received by the recipient falling in such exceptions, nothing will be taxable in the hands of the recipient. So friends, I suggest you to go through the exception part again, and practically also this will be very much important, wherein any property if transferred out of will or without consideration, adequate consideration, then practically if you see this will have much of a relevance. In examination also, questions may be asked on this particular part. So friends, a tabular summary form wherein whatever we have studied in the preceding part has been tabulated. Nature of asset, money, the whole of the amount if the same is exceeding 50,000 will be taxable in the hands of the recipient. Movable property, without consideration, anything exceeding 50,000 entire amount will be taxable in the hands of the recipient. Inadequate consideration, fair market value, which is exceeding the consideration amount, will be taxable in the hands of the recipient. Immovable property without consideration, entire benefit is taxable in the hands of the recipient. Inadequate consideration, the difference between stamp duty value and the consideration amount will be compared with 50,000 and 5% of the consideration, whichever is higher. We took an example to understand this scenario as well. So friends, till now we have studied three categories of money, movable property and immovable property. Money is a simpler category. Only if the same is exceeding 50,000, then entire amount is taxable. Movable property without consideration, inadequate consideration. If the benefit is exceeding 50,000, entire amount is taxable. Entire benefit amount is taxable in the hands of the recipient. In movable property, it is similar to movable property. The immovable property part is similar to movable property. The only difference is additional criteria of 5% of the consideration needs to be considered. Also, there are three provisos: date of agreement and date of registration. Correct? Date of agreement, wherein the stamp duty value on the date of agreement can be considered if certain amount has been paid by the recipient on or before the date of agreement, and the amount of consideration has been paid through prescribed modes. This was mentioned in the second proviso. And the third proviso, wherein the recipient can challenge the stamp duty value derived by the assessing officer, in which case assessing officer has to obtain services of the valuation officer to derive the actual value of the property. And this is applicable in the case of immovable property only. Meaning of certain terms: property, as we had discussed, that property which has been mentioned under the definition of the property only are to be considered for the purpose of 56(2)(10). And if the property is used for the purpose of business or profession, then the same won't be included under section 56(2)(10). So the properties which are included under the definition of the term property is a capital asset of the SSC, namely. So here friends, capital asset term is important, as we had discussed, that if the property is from business or profession, then it won't fall under 56(2)(10). Meaning, if the property is used for the purpose of business or profession, it will be stock in trade and not a capital asset. Correct? So only if the property is a capital asset, then immovable property, being land or building, or both. For movable property, shares and securities, jewelry, archaeological collections, drawings, paintings, sculptures, any work, art or bullion are included in the term property other than immovable property. Correct friends? You can see, let's take an example that motor car won't fall under the term property, hasn't been mentioned under the term property. In such a case, motor car provided by Mr. A to Mr. B at a consideration, the value of the motor car, fair market value of the motor car is 3 lakhs. In such a case, since motor car hasn't been mentioned under the term property, 56(2)(10) won't be applicable to the recipient of the motor car, and accordingly nothing will be taxed in the hands of the recipient under section 56(2)(10). Definition of relative we have already discussed. Now friends, starting with the first illustration on your screen, Mr. Dealer, who is a share dealer, received the following without consideration during the previous year 1920 from his friend Mr. Donor. So following has been received without consideration by the SSC. First, a plot of land at Chennai on 25th of June 2019. So it will fall under the category of immovable property, because as per the definition also, it includes land or building or both. So plot of land will be included, will be considered for 56 to 10. So friend, plot of land, the stamp duty value of which is 6 lakhs on that date Mr. Donor had purchased. Okay, the stamp duty value of 6 lakhs on that date, meaning on 25th of June 2019, the stamp duty value was 6 lakhs. Mr. Donor had purchased the same in May 2015. That won't matter. We are more concerned with the recipient, wherein I was specifically searching for the date of agreement and date of registration as such. But here you can see it's an immovable property has been transferred to the recipient, and the stamp duty value of the same is 6 lakhs, and nothing has been paid by the dealer, by Mr. Dealer, and accordingly you can say 6 lakhs entirely will be subject to tax in the hands of the dealer, as it is exceeding 50,000 rupees, correct? And 5% of the consideration, that criteria will be applicable only when certain condition has been paid by the recipient, and here the property has been transferred without any consideration. Second category, so in the first category 6 lakh amount is entirely taxable. Second category, cash gift of 60,000 on his wedding anniversary. So it's not the marriage, but it's an anniversary. Accordingly, it won't fall in the exception, and 60,000, since it is exceeding 50,000, and the entire benefit accordingly will be subject to tax in the hands of the recipient. So second category also entirely taxable. Third, bullion, the fair market value of which was 80,000 on his birthday. So this was received on his birthday. However, it doesn't fall in any of the exceptions. Also, the fair market value of the movable property is exceeding 50,000. Accordingly, entire amount, the benefit amount, will be taxable in the hands of the SSC. So first, second, and third entirely taxable in the hands of the recipient. Correct. Further adjustments. Mr. Dealer purchased from his friend Mr. X, so he is another person and not Mr. Donor. First three categories were donated by Mr. Donor. Now Mr. X, from whom Mr. Dealer has purchased. Mr. X is also a dealer in shares. Mr. Dealer has purchased 10,000 shares of X Limited at 100 each on 30th July 2019. So here you will observe that Mr. Dealer himself is dealing in shares. He has purchased shares. So shares and securities, though falling under the definition of property, we will have to exclude it because it is not a capital asset. Shares and securities for Mr. Dealer is not a capital asset, it is stock in trade, and accordingly section 56 to 10 won't be applicable. So here 10,000 shares has been purchased from Mr. X, the fair market value of which was 250 each on that date. So in a way he has purchased the share at a concessional rate. Mr. Dealer sold these shares in the course of his business on 31st of July 2019. So friends, as you can see, as Mr. Dealer is not, the shares and securities are not capital asset for Mr. Dealer, so nothing will be taxable in the hands of dealer, Mr. Dealer, under section 56 to 10. Further, on 31st December 2019, Mr. Dealer took possession of property, which is building, booked by him 2 years back at 50 lakhs. Fine. The stamp duty value of the property as on the said date, which is 31st December 2019, was 60 lakhs. So possession of the property was in 31st of December 2019, and on that date the stamp duty value was 60 lakhs. correct? And on the date of booking, which was before 2 years, and on the date of booking, the stamp duty value was 57 lakhs. So friends, date of registration and date of agreement, right? He had paid 10 lakhs by way of account pay check as down payment on the date of booking, correct? So friends, you'll observe that possession of the property and date of booking of the property are different. It will be synonymous to date of booking will be date of registration, date of booking will be date of agreement, and possession of the property is nothing but date of registration. So there is a difference between the two, and there is a down payment of 10 lakhs paid by the SSC also on the date of booking, which is on the date of registration. Certain amount has been paid by the SSC. So you can say conditions required in the second proviso has been completed. Two conditions being you should be making payment wholly or partly on or before the date of registration. So on the date of booking, 10 lakhs was paid. Also, the amount should be paid in account pay, check, account pay, bank draft, and other prescribed modes. Here, account pay check has also been made. Only through account pay check the down payment has been paid by the SSC. So both the conditions mentioned in second proviso has been satisfied by the SSC, and accordingly stamp duty value on the date of booking, that is on the date of agreement, which is 57 lakhs, will be considered instead of 60 lakhs. So here you can see the benefit. The stamp duty value has increased since past 2 years, and accordingly stamp duty value on the date of agreement will be considered for the purpose of computation of benefit under section 56(2)(10). On 31st of March 2020, he sold the plot of land at Chennai for 10 lakhs. So the plot of land which was purchased in the first adjustment, which was of 6 lakhs, right, has been sold for 10 lakhs. So capital gains would arise in the hands of the recipient, in the hands of Mr. Dealer. Compute the income of Mr. Dealer chargeable under the head income from other sources and capital gains for assessment year 2021. So you can see specifically two headers are to be taken into account: income from other sources and capital gains. So capital gains is nothing but plot of Chennai which has been sold. Income from other sources, it is nothing but anything which is taxable under section 56 to 10. And for this particular thing, the shares have been sold. It will be taxable as business and profession income. And the question specifically doesn't say that total income is to be computed. It only says that income under the head income from other sources and capital gains are to be computed by the SSC, by Mr. in the hands of Mr. Dealer. So friends, let's start with the solution. First is, let's compute income from other sources. Computation under the head computation of income of Mr. Dealer for assessment year 2021 under the head. I'm mentioning it in short form. In examination, you will have to write in full form. Computation of income of Mr. Dealer for assessment year 2021 under the head income from other sources. Right. So first adjustment, plot of land. So here, since no consideration has been paid by the SSC, so 5% criteria won't be applicable. So the only criteria left is 50,000. Anything in excess of 50,000 will be taxable. The entire benefit will be taxable under section 56 to 10. Plot of land is nothing but 6 lakhs is entirely taxable in the hands of Mr. Dealer, since property has been transferred without consideration. cash gift, entirely taxable for simplicity purpose. Correct. Third, bullion, which will be into movable property since received on birthday, which doesn't fall in the exception, entirely taxable since received without consideration. Now, fourth is for the purpose of shares. Let's put a note. Shares, since dealer is dealing in shares, the property, shares and securities, shares and securities will be a stock in trade, will be a stock in trade for the SSC. Accordingly, you can say since section 56 to 10 is applicable only to a capital asset, correct? Only to a capital asset, nothing will be taxable in the hands of the SSC. Nothing will be taxable in the hands of the SSC under section 56 to 10. Only because shares and securities in the case of Mr. Dealer is stock in trade and not capital asset. Correct? And we did not compute anything. Income from the same will be business and profession income for Mr. Dealer, and we are not specifically asked in the question to compute income from business or profession. Accordingly, nothing is taxable in the hands of Mr. Dealer. Correct? Moving on to the next part. Next part is fifth, which is property which has been sold, property which has been possessed. It is related to immovable property. So, immovable property 31st of December 2019. In this case, date of agreement, which is date of booking, is nothing but, okay, the date hasn't been mentioned as such, but you can always mention the value on the date of booking. Stamp duty value on the date of agreement or date of booking will be considered because first is payment is made in account pay check, correct, and part payment made on or before the date of booking, correct. So stamp duty value which will be considered over here is 57 lakhs. So stamp duty value is nothing but 57 lakhs. Consideration is nothing but 50 lakhs, correct. Just a second. He paid 10 lakhs by account pay check as down payment on the date of booking. That is fine. For the time being, that is relevant only for the proviso, correct. And Mr. Dealer, as you can see, took possession of the property booked by him 2 years back at 50 lakhs. So Actual consideration is 50 lakhs and stamp duty value is 57 lakhs. So property transferred at inadequate consideration, correct? And accordingly, we will have to calculate the benefit amount. So difference, or you can say benefit, is nothing but 7 lakhs. This will be compared higher of following, which is 50,000 and 5% of the consideration. 5% of consideration is nothing but 50 lakhs into 5%, which is nothing but 50 lakhs, 5 lakhs and 2.5 lakhs. So 2.5 lakhs. So this difference amount, friends, will be compared with 2.5 lakhs, which is here. Since the benefit is exceeding 2.5 lakhs, entire benefit amount, which is 7 lakhs in this case, will be taxable under section 56 to 10. So amount taxable under section 56 to 10 is nothing but 7 lakhs. So this was the fifth adjustment. And next is he sold a plot of land at Chennai. So that will be income from capital gains. For the time being, let's hold it and let's finalize the income from other sources. So total income from other sources, is nothing but plot of land, correct? Cash gift, bullion, 80,000. So till now, 6,60,000 plus 80,000 is nothing but 7,40,000. Shares will be nil. Immovable property, which is the fifth adjustment, is nothing but 7 lakhs. So friends, 7,40,000 and 7 lakhs is nothing but 14,40,000. 14,40,000 is the amount taxable under the head income from other sources under section 56 to 10. And after this, computation of capital gains, it is nothing but sale consideration. Sale consideration is 10 lakhs sold during the previous year, and cost of acquisition will be nothing but cost of purchase will be nothing but the 6 lakhs amount which were taxable, which was considered as deemed value, the stamp duty value of the property in the first adjustment, as you can see, which was also taxable over here. This value, friends, will be the cost of purchase in the hands of the SSC, correct? And the property, since it is an immovable property, and the cost of the date of the previous owner won't be applicable. In such a scenario, friends, two things needs to be noted. What will be the cost of purchase? Cost of purchase is nothing but amount which has been considered as benefit under section 56 to 10. It is coming from section 49.4. As per section 49.4, deemed stamp duty value will be deemed stamp duty value under section 56 to 10 will be cost of purchase of the asset, correct? So here 6 lakhs will be deducted from the sale consideration And friends, for determining whether this is short-term or long-term capital gains, in the question you can see Mr. Donor had purchased the land in May 2015 and it was transferred to the SSC in June 2019. So whether it should be the period of holding should be as short term or long term is the question over here. If we take the period of the previous owner as well, then it will be a long term asset. However, if we take the period of holding only from 25th of June 2019, it will be a short term. And remember that in such scenario, the previous owner, the holding period of the previous owner is not to be considered and accordingly it will be a short term capital asset. Correct? So short term capital gains, which is nothing but 4 lakhs. Holding period of the previous owner is not to be considered. Correct? So friends, the short term capital gains is nothing but 4 lakhs, which is 10 lakhs the sale consideration and 6 lakhs the amount which was taxable under section 56(2)(10) will be the cost of acquisition for the SSC. So friends, I hope we concluded all the adjustment. Just a quick cross check. First, second, third has been considered. Second, fourth one was shares transfer, that is fine. Fifth one has also been considered, where the immovable property, date of agreement we have considered. Sale of plot of land is nothing but capital gains. Compute the income of Mr. Dealer chargeable under the head income from other sources and income under the head capital gains for assessment in 2021, which we have concluded. So friends, this concludes the solution for this particular problem. So friends, next illustration number 2 for 56(2)(10. Discuss the taxability or otherwise of the following in the hands of the recipient under section 56(2)(10. So friends, taxability in the hands of the recipient is to be considered. ABCHUF gifted a car to son of Karta. The fair market value of the car is 3 lakhs. So friends, HUF has gifted to the son of the Karta, which is member of the HUF. So here two definitions needs to be considered. Definition of relative, definition of property. In the case of definition of relative, any exchange of gifts, or you can say any exchange of properties as well, between HUF and members of HUF falls within the exception. Correct? So here HUF is gifting to the son of Karta. It falls under the exception part, as well as definition of property. Motor car is not included under the definition of property. So in both the definition, it is falling under the definition of relative, and accordingly it is falling under the exceptions to section 56(2)(10). Also motor car also is not included in the definition of property for the purpose of computing benefit under section 56(2)(10). So friends, fair market value of the car of 3 lakhs won't be taxable under section 56(2)(10). And there are two exclusions that we can mention. First, under the definition of relative, HUF and Karta exchanges of gift, properties, cash between relatives is an exception to section 56(2)(10). Also, car doesn't fall under the definition of property. Second, Sharon, a member of her father's HUF, so assuming she is not married, a member of her father's HUF, transferred a house property to the HUF without consideration. The stamp duty value of the property is 10 lakhs. So here also exchanges of gift between relatives, exchanges of property between relatives without consideration, and Sharon and member of HUF both are relatives, and accordingly nothing will be taxable in the hands of the recipient. So friends, for second point, if we consider income from other sources, then in the hands of the recipient nothing will be taxable as the transaction is between relatives. However, having said that, if we analyze from the perspective of the donor or the transferor, then implications of clubbing provisions cannot be denied, wherein the transferor transferring a property without consideration to the relative, in such a case, section 64(2) will be applicable as a clubbing provision. However, as far as this illustration is concerned, we have to comment only from the perspective of the recipient, which is father, member of a father's HUF, which has been transferred to HUF. Okay, the property has been transferred to HUF. In the hands of the recipient HUF, if we see, nothing will be taxable under section 56 to 10 as the property has been transferred by a relative. ABC HUF received 80,000 in cash from niece of the Karta, that is daughter of Karta's sister. So friends, first we will have to analyze whether if the transaction falls, if the transaction is between the relative or not, and Karta's married sister's daughter has provided the property. Fine. So since sister is married, she will no more be a part of the HUF, and accordingly any gift either from sister or from her daughter to the HUF will not be between relatives. The transaction won't be between relatives, and accordingly cash received will be taxable entirely since it is exceeding 50,000 as well. So transactions are not between relative and the consideration is exceeding 50,000. Accordingly, as per 56 to 10, 80,000 will be entirely taxable in the hands of recipient HUF. Correct? Mr. A received 1,000 shares of ABC Limited from his friend as a gift on the occasion of his birthday, so is not falling under the exception definition since anything received on the marriage occasion is to be considered and not birthday, not wedding anniversary. So till now, and shares and securities are also qualifying under the definition of the property, and we will have to see what is the value over here, whether it is exceeding 50,000 or not. So till now, it may be taxable because it is falling in all the criteria of 56 to 10. The fair market value on that date was 10 per share. So friends, fair market value is 10 and shares purchased are 1,000. So 1,000 into 10 is nothing but 10,000, which is less than 50,000. Ideally, nothing will be taxable. Correct. He also received jewelry worth 10,000 worth 1 lakh FMV from his nephew on the same day. Correct. So friends, as you can see, jewelry is a property, falls under the definition of property. Fine. Market value, fair market value is exceeding 1 lakhs. Fine. And whether nephew will fall under the definition of relative or not is the question. So whether nephew will fall under the definition of the relative or not, for that purpose, definition of relative if you see, lineal ascendant or descendant, and brothers and sisters of the individual falls under the definition of relative. However, the children of brother or sister hasn't been specifically included. Spouse of the brother and sisters are included. However, children of brother or either sister are not included in the definition of relative. Accordingly, accordingly, jewelry gifts provided by nephew will be taxable in the hands of the SSC. Will be taxable in the hands of Mr. A, as it is also exceeding 1 lakh, as it is also exceeding 50,000, and the value is 1 lakh. And here, on the same day word is also important, since on the same day the aggregate value is more than 50,000. Not only 1 lakh will be taxable, but also the shares which has been transferred to him, which is 10,000 value, will also be subject to tax in the hands of the SSC. So if on the same day the aggregate value of the property is exceeding 50,000, then whole of the benefit amount has to be taxed in the hands of the recipient. So not only 1 lakh, friends, not only 1 lakh, but also 10,000 will be taxable in the hands of the SSC, as on a given day, on the same day, he has derived the benefit, and the aggregate benefit on the same day is exceeding 50,000. So friends, let's jot down the reasons in brief. I'm sure that you have noted down my reasons as well, which I have provided by way of explanation earlier in this video. Fine. So just to help you out, let's go case by case. First is, I will just mention the reason in brief. In examination, you can expect that this question may be asked for 8 marks, you can say, and each and every adjustment carries 2 marks then in that case, and 2 marks will be 1 mark for the correct answer and another mark for specifying a correct reason. 2 marks. So not only mentioning a correct answer, but reasoning behind it is also required to be mentioned in the examination. So I will mention the reason in brief over here. Correct. ABCHF gifted a car. So we had analyzed two definitions. Car is not included in the definition of property. Correct. And accordingly, also transaction between HUF and son of Karta will be termed as transaction between relative. Correct. Relatives. Accordingly, nothing is taxable in the hands of the recipient ABCHUF. Correct. Second part, Sharon, a member of her father's HUF, correct, transferred a house property without consideration. Stamp duty value of the property is 10 lakhs. Transaction between daughter of Karta and HUF falls under the definition of relative. Accordingly, nothing is taxable in the hands of recipient HUF. Correct. Third one, ABCHUF received 80,000 in cash from niece of the Karta, which is daughter of Karta's sister. Transaction between daughter of Karta and HUF is not between relatives. Accordingly, entire amount of 80,000 is taxable. 80,000 in cash is accordingly taxable in the hands of the recipient. And the last one is, and you can say a tricky one, wherein shares transferred, shares and let's analyzed one by one, correct? So this would be the A part, shares transferred on occasion of birthday is taxable, correct? However, however, since value of benefit is less than 50,000, is less than 50,000, nothing is taxable for recipient, correct? Part B, jewelry falls under the definition of property, correct? And nephew is not a relative of Mr. A, correct? So 1 lakh is taxable for recipient Mr. A as it is exceeding 50,000, correctly? Only because it is exceeding 50,000 that it is taxable. So A plus B, if we see over here, A plus B is nothing but A shares and jewelry. So A plus B, since on the same day the benefit is exceeding 50,000, entire amount of benefit of 1,10,000, which is nothing but 10,000 of shares plus 1 lakh of the jewelry is taxable under section 56 to 10. Because in the category of shares, you would have observed that the only criteria because of which it wasn't taxable was it wasn't exceeding 50,000. However, since total benefit on a given day was aggregating more than 50,000, even 10,000 will be subject to tax in the hands of the recipient. So friends, this concludes the second illustration as well. So friends, moving on to the next illustration, which will be the last illustration for section 56 to 10. On your screen, Mr. AC, a property dealer, sold a building in the course of his business to his friend Mr. RR. Mr. RR, who is a manufacturer, for 100 lakhs on 31st of Jan 2020, where the stamp duty value was 130 lakhs. So a property dealer, which is the SSC, is selling a building in the course of his business to the manufacturer Mr. RR, right? So from the perspective of the property dealer, his income, this income will be business income, right? And for Mr. RR, we can see that nothing has been mentioned whether the property has been transferred without consideration or with inadequate consideration. For RR, it will be receipt of a property, of an immovable property. 56 to 10 implications will apply for Mr. RR. The agreement was, however, entered on 31st of October 2010, 31st of October 2019. So friends, provisos related to immovable property that we have discussed under section 56 to 10 will come into picture, wherein date of agreement and date of registration will have to be applied, whether stamp duty value on the date of agreement or the stamp duty value on the date of registration is to be considered will come into picture. The question will come into picture in this problem. So the agreement was however entered into 31st of October 2019 when the stamp duty value was 120 lakhs. So on the date of agreement you can see friends 120 lakhs was the stamp duty value, whereas on the date of transfer or on the date of registration you can say the date of agreement the stamp duty value is 130 lakhs, which is more than 120 lakhs. Mr. AC had received a down payment of 10 lakhs by cross check from Mr. RR on the date of agreement. So friends, amount of consideration has been paid by the SSC by Mr. RR. So if you see second proviso, there were two conditions that we had discussed. First, certain amount should be paid by the SSC on or before. Certain amount should be paid by the recipient on or before the date of agreement. And here, on the date of agreement, if you see, the payment has been made. Down payment of 10 lakhs has been made by the recipient. And the payment should be made by prescribed modes. And the prescribed modes are account pay, cross check, account pay, bank draft, ECS, and other prescribed modes through electronic mode. However, friends, here you can see the payment has been done by cross check and not account pay cross check. So, friends, you can understand the difference that it is not a account pay cross check. Accordingly, payment has not been made through prescribed modes. Accordingly, one of the conditions of the proviso are not satisfied, is not satisfied by the recipient, and the implication will be stamp duty value of the date of agreement cannot be considered, and stamp duty value on the date of registration, which in this case on the date of possession of the property, will have to be applied in the case of the SSC, in the case of the recipient Mr. RR, and we will not consider stamp duty value of 120 lakhs. Instead, stamp duty value on the date of registration of the property, that is 130 lakhs, will have to be considered. Moving on to the next para, discuss the tax implication in the hands of Mr. AC, which is a property dealer, fine, and Mr. RR, who is the recipient of the property. Assuming that Mr. AC has purchased the building for 80 lakhs on 1st June 2018. So the property was purchased by Mr. AC in June 2018. This will be helpful while computing either capital gains or business or profession income. Since Mr. AC is a property dealer, any income will have to compute under, any income from the property will be computed under business and profession income. So implications for Mr. AC and Mr. RR needs to be ascertained. Would your answer be different if Mr. AC was a share broker instead of a property dealer? Yes, answer would differ. As far as the implications of Mr. AC is concerned, if he is no more a property dealer, any income from the property will be taxable as capital gains. However, from the perspective of the recipient of the property, nothing will change. Even if Mr. AC, it doesn't matter whether the transferor is a property dealer or not. So friends, let's jot down these points by way of a solution. First is part 1, wherein Mr. AC is a property dealer, correct? So implications for Mr. AC. first should be income from business or profession. So friends, at the time of discussion of the topic business from income from business or profession, we had studied section 43 CA. So friends, section 43 CA, wherein if a property has been transferred by a person who is a property dealer, wherein a stock in trade if transferred, the stamp duty value of the property needs to be considered. Stamp duty value of the property will be considered, and the tolerance limit that we had discussed was 105% of the consideration. If it is less than 105% of the consideration, then nothing will be taxable. We will assume that the value at which it has been transferred, the consideration value, will be the business income. If it is more than, if the stamp duty value is more than 105% of the consideration, then in that case stamp duty value will be considered for the purpose of computation, for the purpose of computation of business income. Correct? Then section 43 CA will be applicable. So friends, section 43 CA, wherein we have to compute the business income. Correct? So first, let's compute the sale consideration, taxability under section 43 CA. For Mr. AC, sale consideration, if you see, we'll have to analyze first of all whether the value is exceeding 105% of the consideration. So 105%, there are two scenarios over here. First, what should be the stamp duty value in the hands of Mr. AC, whether it should be on the date of agreement or on the date of registration, that is on the date of transfer, as we had discussed. Since the down payment was made by Mr. RR through a cross check and not account pay cross check, in such a scenario the date of agreement benefit won't be available, stamp duty on the date of agreement won't be available. Accordingly, stamp duty on the date of transfer will be considered. Accordingly, stamp duty, you will have to mention a reason in the examination. I've discussed this orally, but in examination, do mention it by way of a note. Fine. So stamp duty value on the date of transfer to be considered, and the reason we have already discussed, which is supposed to be mentioned by way of a note in the examination. Fine. In the interest of time, I am not mentioning the reason. So friend, stamp duty value on the date to be considered. Correct? So 130 lakhs, 130 lakhs, which will exceed 5% of 10 lakhs, which will exceed 5% of 100 lakhs. Correct? 5% is nothing but the tolerance limit that we had discussed. If the consideration is less than, if the stamp duty value is more than 105% of the consideration, then stamp duty value will be the sale consideration. Correct? Will be the business income. Correct? So, which is exceeding 5% of the consideration, or to put it differently, excess of stamp duty value. This will help you. Excess of stamp duty value over consideration. Over consideration is nothing but 130 lakhs minus 100 lakhs. Correct? Which is the consideration. This benefit is supposed to be analyzed and compared with 5% of 100 lakhs. To be compared with 5% of 100 lakhs, correct? Which is nothing but 5 lakhs, correct? So, 30 lakhs, which is this benefit, is exceeding 5% of 10 lakhs, which is 5 lakhs. Since stamp duty value, the difference, you can say the excess amount is exceeding 5% of the consideration, stamp duty value will be the business income in the hands of the SSC and not 100 lakhs. Consideration won't be the sale consideration. 100 lakhs won't be the sale consideration. The sale consideration as per section 43 CA will be 130 lakhs, which is this one. Correct? So two scenarios we have discussed, whether date of agreement or date of transfer to be considered. Stamp duty on the date of transfer will be considered, correct? Because the payment has been made by the recipient by cross check and not account pay cross check. And the second is difference is exceeding 105%, correct? The stamp duty value is exceeding 105% of the consideration, and accordingly 130 lakhs has been considered as stamp duty value. Less, for computing the net business income in the hands of Mr. AC, here you can see Mr. AC has purchased the building for 80 lakhs on June 2018, correct? So accordingly, the difference between the two, cost of purchase is nothing but 80 lakhs. So the net amount will be taxable under section 43 CA. Amount taxable as business income under section 43 CA in the hands of Mr. AC is nothing but 130 lakhs minus 80 lakhs, which is 50 lakhs, correct? So these were the tax implications in the hands of Mr. A. Then tax implications friends, for Mr. RR. Section applicable is section 56 to 10, correct? The recipient amount will be, the value will be, since it is a immovable property and certain consideration has been paid by RR, which is 100 lakhs. So immovable property is being transferred with inadequate consideration because the stamp duty value in this case is 130 lakhs and the value of the property transferred, the amount transferred is only 100 lakhs. So it is exceeding 50,000, that's for sure. Also, second criteria is 5% of the consideration amount, which in this case was, it calculated as, on your screen you can see 5% of the consideration is nothing but it is 5 lakhs. So the difference, which is 130 minus 100, the difference of 30 lakhs is more than 5 lakhs. Since it is exceeding 5% of the consideration, the benefit amount will be subject to tax under income from other sources. And the benefit in this case is 30 lakhs. So friends, difference is nothing but 130 lakhs, which will be considered as stamp duty value on the date of transfer only because the payment by Mr. RR was through a cross check and not account pay cross check. And the consideration which has been paid by Mr. RR, 30 lakhs, will be subject to tax in the hands of Mr. RR. Now part 2. Part 2 is nothing but Mr. AC is not a property dealer. In such a case, 43 CA won't be applicable as business income. The section which will be applicable is 50C, which is capital gains section. So friends, 50C will be applicable, which income from such property will be taxable under the head capital gains. In the hands of Mr. A, in the hands of Mr. A, Mr. AC, correct? Section 50C. Sale consideration will be 130 lakhs as the same is exceeding 105% of the consideration. You can say as the stamp duty, as the stamp duty value is exceeding 105% of the consideration, which is similar to 43CA, and accordingly sale consideration is 130 lakhs. Cost of purchase will also remain the same as 80 lakhs. There is no change in that understanding, correct? So 80 lakhs is the cost of purchase and the amount will remain the same. The taxable difference will be remain the same. Taxable amount under section 50C is nothing but 50 lakhs. So friends, if we compare 43CA and 50C, provisions are same and the taxable amount is also same as 50 lakhs, which is difference between 130 lakhs the stamp duty value and 80 lakhs the cost of purchase, and it will be taxable as short-term capital gains, friends, because the value, because the period of holding is less than 2 years, correct? So friends, only the head changes where the property dealer will be taxable under the head profit and gains from business or profession, and if he is not a property dealer, if Mr. AC is not a property dealer, then he will be taxable under the head capital gains, correct? And the tax implications in the hands of tax implications for Mr. RR is same as above. There will be no change in understanding for Mr. RR, wherein the taxability will be determined as per section 56(2)(10), and the taxable amount will be 30 lakhs. It doesn't matter whether the transferor is a property dealer or a share dealer. For Mr. RR, the recipient, which is into the business of manufacturing, the tax implications for Mr. RR is the tax amount is 30 lakhs and it will be taxable under section 56(2)(10). So friends, we have studied 3 sections over here, and one more important point, wherein the date of agreement, stamp duty value on the date of agreement is not to be considered, wherein the payment has not been made through prescribed modes, and 3 sections, section 43CA, wherein the stamp duty value is exceeding 105% of the consideration. Section 43CA will be applicable, correct? And for a property dealer, any excess amount will be subject to tax under section 43CA. And if the SSC is not a property dealer, if it is a capital asset, the immovable property is a capital asset for the SSC, then capital gains implications will apply. And for the recipient, the amount will continue to be taxable under section 56(2)(10). So friends, this concludes the illustration part as well, and this concludes the subtopic of 56(2)(10), wherein we have studied money, cash. Second is movable property, and third immovable property. Received with consideration, received without consideration, or with inadequate consideration will be subject to tax in the hands of 56 in the hands of the recipient under section 56 to 10. So friends, this concludes the subtopic of 56 to 10. Thank you.